That is a seriously nice looking chart right now on Bitcoin daily. If you look at the projections chart, the projection that we had from the when I look at the reversal from mid-July there, I know we had
Yeah,
technically a reversal a couple days before that. I can even, you know what, I'll even
it's
pull it
fine
back
the
a
way it
bit.
is. I see what you're doing. Yeah.
Yeah, but I'll pull it back a few days to that actual reversal. It's a little bit different. There you go. Because that's quite a different reversal. There you go. Here we go.
All
I'll
right, let me
post this
see.
thing on here. I'll post it in a second. I'll just replace the one that I put in there already because it's a little bit different. Here we go.
Hang on, I got
There you
something
go.
playing in the
All right.
background. Let me pause this. I got something playing in the background.
Actually, maybe this is clearer. I think I'll post it like this. Anyway,
Uh,
what we have here on Ye Old Bitcoin Daily is a very nice run up through the mean that we had. We had that nice little run up. Obviously, that 10% move a few days ago, and Bitcoin's basically been pumping since then on the daily. And if you look at the projections for it, it is looking nice because we are above the mean running, and the mean itself is, even though it's still running down, is starting to slow down on the downward slope and is starting to find an area to turn around from, possibly, if it turns here in this week, which it probably will. If it continues going sideways and a bit up, the probabilities for the day are still looking up. The projection, the direction projector that's in the RMLRs there is still green and positively correlated on the 3012 length RMLR, and is green and negatively correlated on the shorter length 1110 RMLR. And you can see that we hit a Laplace distribution band perfectly today, just to the downside of where the price action was, earlier in the
I
day.
see
Basically,
it.
it hit
Yeah, yeah, yeah.
that Laplace. It
Yeah.
hit an RMLR band there also perfectly and bounced right up, and then bounced up to the RMLR and normal distribution bands that were above, and now it's floating right below that. So we basically have a nice day of so far a walk up, but it is a very volatile day if you actually look at the volatility of the day, and I'm going to put that on in a little minute just so we can look at that one as well. I just
What
need
was
to,
released at 8:30 this morning? I don't have the TV on. Was it CPI this morning?
you know what? I didn't even look
Yeah,
at
I
that.
know it doesn't news isn't related here. I got it.
I mean, we can look at it, but if there's something interesting to talk about, but yeah, I don't make
Uh,
a habit of that.
yeah, it's all good.
It's
Something
yeah,
like that I
no,
usually do. That's why I asked. Some bigger news I do that.
yeah, yeah, no. It might even be a good idea to do that, and often I scan business news just to kind of know what's going on in the bigger trends, but not obviously
Right.
not none of us are looking at it for trading info. But if we look at this chart, I'm going to well, let me just again wrap up with the projections chart before I switch to the volatility chart. The projections chart right now are basically looking like let me see, we are literally sitting at one, two. Hang on, let me see this thing. One, two. We're sitting not far, about two, three, two, like 600 below the first loss band down of the projection that started in mid-August there on the 14th of August when we started to go back down. And that is not a very far range to go to get to that first Laplace distribution. We are still currently in between the 68, obviously, and the 95, but the 95 is far down below. It's down by where we were last week before we started to see right around the run up from that low bounce. That was when we were down at the 95%. So now we've come up all the way and we're near the 68%. We're much closer to it. We're probably around, if I had to eyeball it, around 70, 72%, something like that. So if we get to the 68, that's a very nice area to be in, because from there, the projections would be looking very different, especially if we actually update the projections, which I'll probably do in the next day or two. If this thing doesn't just fall right back down the way the RMLRs are looking, If it doesn't start to fall back down towards the middle of the week, one thing that's interesting is there is an intersection there of the RMLRs around the 18th of this month, 18th and 19th, and if that happens, even if it doesn't happen, if it just stays relatively close, because again, we don't care if the RMLRs intersect so much unless there's a mean in between, but along the way, there will be around the 18th or so, probably an intersection of the mean and the RMLR. Could even happen before. But we know that when there's a significant, when there's an intersection of the RMLR and the mean, we know that usually, like on a higher time frame, like a day, especially within a couple candles, like usually 1 to 4 candles, and very often happens on the candle, like on the very next candle, we'll see a nice move up or down from that intersection, from that point of intersection. So that happens obviously again because for people who are new and or not heard this before, when you have an intersection of the RMLR and the mean, it's very often telling you that that's happening when there's low volatility. That's why they're intersecting. You have low volatility, you have low variance, you very often have low entropy, so it can very often be in a random walk and getting ready to make a next move towards a trending move, or to make just a continuation of a very strong random walk, which does happen. But we will likely see an intersection of that mean and an RMLR this week. If it happens within the next 5 days or so, maybe less, but around 5 days, we should see then maybe over the weekend or next week some very nice further action. And this week, in the meantime, let's go look first at the volatility before I get into the weekly range and everything. I'm going to go post this daily chart of volatility and variance and APP.
Will you go over the S&P when you're done with this too, if you don't mind?
I will. As we
Yeah,
get
yeah,
closer in the
yep,
next
yeah.
5-10 minutes, I'll get to it.
Oh, no worries.
So
At your
Bitcoin there, you can see what?
no, at your leisure, man. I just
Oh yeah,
appreciate it.
it's good, man. We'll cover it. We'll get to it quick, even.
Yeah,
Yeah,
we're
I'll
all
just run
good.
through this quick. But on the volatility here, you can see on Bitcoin on the charts I just posted, the volatility lengths. You've got descending volatility on the short length. It's strongly positively correlated price action, and on the middle length, you've got rising volatility with again rising positively correlated price action, and on the long length, you've got low but slowly rising volatility with rising positive correlation, but it's not significant. So this is still a very volatile area, definitely. And you've got everything from it's just mixed, right, down, flat, and up. And on the day, we see that so far it has been exactly that. It went down, it went a little bit flat, and has been going up since then. So the readings on the AVR info panel or the AVRs themselves are spot on. And we can also see that the APPs are, if you look at the bottom left of the screen, the bottom left of the chart that I just posted, the APPs there are very high, middle, and well, they're all not very low at this point. Even the low length one, yeah, the yellow one there is actually the long length, and that one's rising. The middle length is right there in the middle, and the short length is already quite high, and looking for potentially a move down in the coming days. Um, Again, the variance is turning down over the past couple days, while you have negative correlation sloping down. It's still positive correlation, but it's sloping down. So that's what that explains the current pump after the mad pump we had on Friday. And yeah, so today's Bitcoin projections above. If you look at the Gaussian band, we almost touched the first Gaussian band above the mean today, which is just short of that projection boss that's in the left panel there. But that projection boss isn't properly placed, so I wouldn't actually look at that one. But the Gaussian band that's above it, that's just above the price action, is a very strong place for a take profit target. And as you can see, we came very close to it, and it was a good place to take a quick profit on a scalp. on the lower time frames. I just wanted to look at the weekly projections, and we'll look at SPY real quick. Weekly projections. If you look at the weekly of Bitcoin, well, if you look at the VRE chart on Bitcoin, we look at the weekly. I will post this thing. Let me just put a couple of these indicators out of sight, because otherwise I'll just make things too blurry or something. Hang on, I'll put this thing away, and I will hide one of these. Yeah, there you go. That's good. And now, so we have the weekly. Post the weekly range. Here we go. You know what? I'll even put the labels on it so that we can see it when people watch it in the video, and stretch it out a little bit so it's a bit more clear. Okay, so we have a new weekly range here that is from 20,164 with a pivot at 20,725 and upper limit at 21,227. So that's quite a range for Bitcoin. Let me post this in the stream chat. Here we go. That's the projection. That's the weekly range on VRE. You can see the weekly range there. So that weekly range is wide. It is 5.54% of the asset price, 5.52% of the asset price at more than $1,000 across. So therefore, expect this week to be ranging. Higher probabilities say that it'll be ranging on throughout the week. But on the day, we have trending days, because today's CVR is actually relatively tight. If you look at the same chart, where is that? Yeah, here we go. The daily, moving. Where is this? The monthly we know. Hang on, sorry. Why is this not showing up? There we go. The range here is 0.69% on the daily range. So with a daily range of 0.69%, that is tight. That is less than 1%. So that's why today a trending move day is the one that is more probable, and we've already seen a couple of nice trending moves. So I just wanted to point that out. We can come back to Bitcoin later, but I'm just going to pull up SPY right now. See where SPY is. SPY did very well on Friday, right after that stream. We hit exactly that target that Bilbo had pointed out on his chart on Friday, and we showed it in the video, and MJ was able to even show that it hit the target at the beginning of the last video while he was processing it out. Look at that. Is SPY? I have SPY at 408.74 right now. Right, we got open and market opens. The traditional market's open 15 minutes. And we are at 408. Let's see where we're on Friday. It's closed on Friday right around, what was that? Around 406, and then we popped up obviously today quite a bit. 406, we went up already a few bucks, and it has been bouncing there nicely between the levels there. It started out with a candle today, a couple hours ago, that literally started at the second RMLR up. Let me put this SPY chart up on the stream chat so we can follow along in the video. There we
What
go,
time
the
frame?
SPY chart. That's the 15-minute chart, but it
Right.
shows, the VRE ranges, so it doesn't really, those time frames are all
Yeah. Well, I have it.
relatively
Yeah, you see how it
straightforward.
tagged the R2 as well, or the daily CVR, that red line up top.
Yeah,
I think that's what that is, right? The
well,
resistance
no,
one.
daily CVR, daily CVR is at 398, with the
Okay.
top and bottom of that range being the top being 399.42 and the bottom being 397.5. So
Well, what did
that,
it
and
tag
then
there at 408.37? That red line that you see it tagged at the very top here this morning.
0.48.
I think you said alpha high
We're
time.
tagged there. No, there we're tagged there this morning. The very high, the very high line there.
Yeah,
That's an alpha. That's an alpha range mean. The 409.37. That one is
yeah,
that the one
yeah.
you mean?
That's a
Yeah,
normal.
409.37. Yeah, that's a high time frame alpha range mean.
Got it.
Um, and that's what that is. That's a mean. So we're below that mean. But we are. Hang on. I'm going to repost this chart a little bit clearer
Oh, we're all
so that
good,
it
man.
shows the daily range at the bottom and also the monthly range below that, because we are well above those things, and it is a tight daily range. It is less than 1%, and that means that we are expecting trending moves on the day. And you bet. I mean, look at those. Look at that. Look at that formation, or whatever you want to call it. Look at that. The way the returns are running up, down, and back up.
Yeah.
That's definitely nice volatile action. And if we look at the returns, we've had some nice sloping down returns today on the RO. Right now, on the 15-minute, those ROs are kind of positive, but still below the zero line. And the entropy, and I will post also a chart of this so that people see what I'm talking about. And the entropy, here we go. The entropy is also falling off falling negative below the zero line. So negative entropy, negative returns, even though they're positively sloping presently on the direction predictor of RO, but they're still negative. And the RMLR direction predictor is up on the 15-minute. And it is looking up as well. So if we continue up here, I mean, we could easily range on SPY today. No, not range. Sorry, we could range, but we are likely to have trending moves, and those trending moves are likely to touch that mean above, which we said is at 409 and change. This one at 409.50, including the daily R3, which is at 409.50, 409.54 even. That is the R3 on the range. I would not be surprised to see it go there and even trend up possibly to the weekly R2 at 411.88. I don't know if you can see that on that chart, so I will post another one of it, weekly R2. The R2. Oops, there we go. Weekly R2. Yeah, so range up to there. I would not be surprised to see a trending move up to there. If it happens, it could happen within the next few hours, probably. And if it trends down, I mean, I would expect it to run down at least to test the RWTs at 407 and then possibly 405.88. If it does hit those RWTs down at 407 and 405.88, that could be a nice area to bounce from. It could also dip a little bit lower, I mean, because that's also at an RMLR, the lower RWT there. If it does drop back, that's a 15-minute RWT, by the way. If it does drop back a bit further to the daily, uh, or to the 4-hour Laplace there down, that would be a very nice area to bounce from, I think, and to have a nice trending move down to there within the next few hours, but then to maybe bounce up a little bit by the end of the day. That's all super long projections, though, of course, because I'm not trading 8 hours ahead of me. I'm looking at the current 15-minute and under usually. But if you just look at the probabilities, that is what it is likely to do. We have, we've had, I mean, obviously very nice action on Friday, very nice action last week. All in all, SPY is looking nice. It is riding nicely above the mean. Uh,
It's above
I
everything.
wouldn't be.
RWT. Yeah.
Yeah, I mean, there's a little bit of there's some bearish div playing out on the ALR, so it could drop down. But it's not a definite thing. I'll post this chart here in case you want to show an updated chart of the same thing in the video or something. It's SPY showing a hard bearish div. And just you can see that we would be having a very nice. I mean, it's in all probability we'll see some nice trending action today because people are going to come in fresh off of a nice little run that we had on Friday, and they're going to be looking for new positions to get into. We are near all kinds of levels here, so should be a good day for trading all in all on lower time frames. If we look at the 5-minute entry, wow, okay, it's pretty random right now, by the way, on 15-minute. But I'm going to post this 5-minute chart where we see entropy next to that information, and we can see. Wow, okay. Copy a link. It is fully random right now, but the random walk on the 5-minute TF of SPY showing entropy 0. Load. Hey Ron, good question. Do I prefer to trade trending or ranging days? I actually prefer to trade ranging days. You know what?
It's the
That's not
hills,
even a
right?
question for me. Yeah, I like the hills.
Yeah,
It's just so much easier on the 1 minute. Like I don't have to worry about when's it gonna pop or drop really hard. So it's just a lot less risk when you're trading. I mean, of course, trending days are lovely as an investor, and especially if it's trending up. And trending days are great if you are in the move and you catch the thing. But if you're not at your desk because you're busy doing other stuff and you miss the trending move, then it's like, all right,
yeah,
I missed that, whatever.
yeah,
But then you miss a big hill, and then your position's slightly different and whatever. But it's fine. But all in all, I like ranging days the best because it's like it's quiet. Nobody's looking usually, especially if it's on a weekend. But it's just generally for me, I prefer being able to get in a nice entry and get good profits really quickly and repeat. Fill up the buckets as often as possible. That's the other thing about trending days. If you miss the good entry, like the best entry of the day, you might not get another great entry for that day on a higher time frame like 15-minute or 1 hour or anything like that. But of course, down on the low time frames, you're always going to get entries. Even on crazy days like Friday, you can still scalp after that big burst. And by the way, if you look at that big burst, but there's another thing about trading is like if you're trading hoping to get on the big pops, like you got to keep in mind those big pops can happen in a minute. Right? Like last Friday, there was like a $500 minute on Bitcoin, 1 minute. Right? If you miss that, you missed that leg of the pop. And if you were busy doing other stuff throughout the day, well, you missed half the pop, and or whatever, a quarter of the pop. And then if you missed another like 3 or 4 minutes throughout the day when the big pops happened, basically you missed the move. And that's why, to me, ranging days are actually a lot more fun to trade because they're way more reliable. You can be way more consistently just getting in and getting out of moves. They're both profitable. Yeah, it doesn't really matter. And obviously, trending days, you'll very often have a bigger return or a bigger return on the move, but you won't necessarily get as many moves. So if you were in on Friday and all you got was 10%, I mean, that's huge. Yeah, that's wonderful. But if you were in a ranging day just going back and forth, making 2% moves up and down all day, well, if you can do that 10 times in a day, you rack up 20%. You know what I mean? So you can actually rack up more damage, more points on a ranging day than on a trending day. Um, so yeah, yeah, exactly. It happens also. That's true, dude. Say Ron, it happens
yep,
that when you trade 24-hour assets, if you're sleeping, very often the moves happen when you're sleeping, and that happens no matter what part of the planet you're sleeping on.
yep,
There's somebody's going to get up before you, and he's going to make that move happen before you wake up, and you're going to wake up. You're like, oh, I missed that move, and that's a thing that, like, a lot of people get stuck on. Fortunately, we don't have to worry about that because we have the same, powerful information no matter where we look at the charts. So we can always find the next best place to get in on. The people that kick themselves about it the most seem to be the people that are using bad information. So to them, it's like they need to be in on that move because otherwise their information is so bad they can't count on it for the rest of the move. They don't even know when to get out. And our tools tell you exactly when to get out. Because what we're looking at is distribution models, right? So the distribution models show you if it's moving away from the mean of a distribution or if it's moving towards that mean of the distribution. And it's really simple. And it's either moving towards or away from that mean in a random walk or a trending move. I mean, that's it. And people want to know, well, how do you know when there's a trending move? Well, you don't have our tools, good luck. Maybe you have access to other trending information that's accurate and based on volatility and entropy. But if you have access to our tools, well, then you're one of the people that has access to the best information you can get about trading assets because it's based on math, right? Like, just look at these charts. I mean, they are extremely clear. So SPY is looking like it is on the 5 minute, like it is ready. I mean, it just, yeah,
So that's why I
it is
posted that
riding above the
chart.
mean.
Yeah, when the
Yeah,
mean's
I see
going
that
right through
chart.
that's 2 RMLRs. I know it's kind of hard to see because stuff
Yeah,
shrunk
yeah,
down,
no,
but
I see it. It's the mean. The mean's touching the RMLR right there on the 5 minute,
yeah,
pretty
right
much
above the
touching right now.
RWT.
Yeah, and if it
Yeah,
keeps pumping, if the RMLR, continues to go up now on the next one and intersects with the mean, we should see some nice action. And again, you can see that this concept of the mean and the RMLR crossing is not crazy. Look, you can look at it earlier today, about an hour ago on the 5 minute. That same chart I posted where you can see that, um, where you could see literally after the RMLR crossed down through the mean, the price fell down a couple bucks, right, and then hit the
right.
mean, and from there started to walk back up. That's literally, I mean, that these are very clear distribution models from the projection boss and with the RMLR, and they show you exactly where the probabilities are, like the Laplace and the normal bands that are also there for each individual candle. So for people who are watching this again on YouTube, when you're looking at these things, what are all these dots on the screen? What are these lines and stuff on the screen? Well, the dots are like the Laplace band and the normal distribution bands for the given candle that you're on, and the projection bosses are projections of those same distribution models starting from an anchor starting point back. So you have, like basically a running curve, a running bell curve of the distribution models. In this case, I have it on Laplace, but you could use normal distribution as well. The reason I like to use Laplace is because for scalps, by the way, market open and RMLR is pumping and price
Yeah,
action is following the returns up on SPY. So here we go. And you've got the intersection of the mean
yeah,
and the RMLR. Boom, it literally just happened. So expect a nice volatile move to start happening within the next few candles here. We're right now, variance is very low, volatility is low. It's full on random. It's though the randomness is positively correlated. Here, I'll post this chart now because now we're talking about the same asset, but the time frame is the chart has changed with more information as the market opens. I'm watching Spy, Sayron. Spy. I'm watching Spy right now. If that's all right with you. If you want me to look at E-mini futures, I'll look at that one too. But yeah, you can see here on the Spy, market just opened and it is running up. And as you pointed out, P Funk, it did run the mean through that RMLR.
yeah,
So we should see some nice action. And you can see there that little move on RMLR, the direction is positively correlated with the upside on the 3012, and the variance is negatively correlated negative, not switching positive. But you can see basically we're looking for the next fat tail on variance, which could easily be positive to the upside or negative. That's the volatility. That's why we monitor even lower time frames. But whichever way that variance will go, with its correlation, will indicate to you the direction. Currently, it is pointing up,
hmm,
and even though it's in a random walk, that random walk will eventually become a trending move. And that's how we determine these things. And on top of that, if you're looking at this thing again for the first time on YouTube or whatever, you can see that we have at the bottom right of the screen of the chart, the direction predictors on the assets on the entropy indicator there, which is currently the teal green. and that means that it is a rising trending move. It is becoming a trending. It is becoming a long prediction. Even though the entropy itself is still random, and the aggressive predictor is full on long, saying go long, and it's been saying that for a few candles, and that's the aqua line above the volatility indicator at the bottom, which is volatility over entropy. So those direction predictors are both positive at the moment. The direction predictor on the RMLR is full on positive still, and we're still seeing this candle move up. Let's see what happens now that it's crossed the the RMLR and the mean. Let's see what happens within these next few candles. It definitely looks like we're set for a nice move. We could possibly run up to that target above. I didn't put an arrow on the target. Should I put an arrow on the target? Let's put an arrow on the target. Arrow on the target. Right there at 409.27. We're going to go up to. We're going to go up to that weekly target. That is a weekly target, though, so we'll put it there. Turn this one around. And, what is that thing doing? There we go. All right. So that yellow target, I will post this thing here. There we go. Oh, hang on.
Sound like the mad typer.
Someone's typing fast. That's not
Yeah,
me. I
thought that was you. I'm like, someone's beating those keys, man.
Yeah, I don't know who that is. Maybe
It's all
Sarah.
good.
That was you? That was you?
Oh, not me.
Okay.
Might have been
I
me,
posted
guys.
I posted a little arrow there. Let's see if we hit that weekly target. That weekly target. Let's see how big that move is. That weekly target is from where we are now 0.63%. So definitely a manageable target that we could hit today. The first target right below there, right, which is a HTF alpha main, is at 410.56, and that is only 0.29%. So clearly we could do that if we don't turn around here. At the moment, we did have a nice little move on that last 5-minute candle, and we can see now. Oh, that was Iscariot typing? Hilarious. Hang on a second. Let me see this. I'm getting the DMs here. Here we go. Yeah, no, Iscariot. It's not a private chat, man. You can join us in the chat. You can join us on voice, as far as I know. It's in the general.
Yeah,
So
it was me. Sorry, guys. I couldn't get in here. The icons were all horizontal, and then I went into my settings and started messing around. Now they're all vertical. So all is good. Continue.
Yeah.
Continue,
Ooh.
oh guru.
Oh, guru.
No, not
awesome.
guru. Just Veps trader looking at charts that you guys are looking at too, reading the same
Professing.
information. Yeah, no, I mean, look, we're all doing this, and those of us that are smart enough to trade this way, frankly, are smart enough to realize that this is the way to trade. This is a better way to trade than the usual garbage that the sad world has to use. Look at this information right now. We see that the SPY hit that mean right above us, right at 409.38. Yeah, it hit at 409.40, literally. And then turned right back down around on the very next candle. That is impressive. If you are if you have a big enough position, 0.13% is clearly a nice little scalp for an open 5-minute candle. And then to get back down on it and bring it back down to exactly where that last candle opened, and floated around there on negative returns on the ALR, playing out the bearish div of the RO that was denied in the last two candles, but seems to be maybe playing out now. And we have all of a sudden the aggressive director saying sell, the aggressive prediction direction predictor. Yeah, that's the one. DP. The aggressive DP is now saying, dump. It's been saying that for this candle, while the regular DP is saying still long, and so is the but the one in the RMLR is in fact changing. So, and we see the price action there. Boom, follow and hit right, and boom, it hit the mean. It's like it's working by the maths. Gee, I wonder why when you have 80 to 90% of all trades being run by bots built by multi-million dollar, budgets by 10x quality developers of the highest order who are very capable of building amazing algorithms that do literally millions of trades a second, and you wonder why it's running by the maths and not the chart art, right? Look at that. It's bouncing right on the mean there. It's doing very nicely. I think did I post that chart? Let me just double check. Post
I
that
just
chart
posted the
again.
minis. It's tagging everything perfect.
Oh, look at that. Oh, good.
Yeah.
You posted the minis perfectly.
Yeah.
I'll go look at the minis in a little minute.
Very
I'll look at the
nice.
minis in a minute.
Yeah. Minis in a mini.
Let's see here. Got volatility expanding. Got volatility expanding. We've got the A2 and negative correlation on the aggressive, on my lower, my updated entropy indicator, I should say. Meanwhile, we've got A2 positively correlated on the older AME E2 EPP, AME A2.EPP. And that's still fully random on the 5 minutes. So when it's random like this and you're getting nice moves like this is exactly the kind of volatility that we're looking for to start off a nice trending move in the coming hours, which I still expect to see on the day, because again, the daily range on SPY is nice and tight. Let's see here again what it is at right now. We've got this range. Yeah, the central range is 50, like we said, it's literally it's like $1.07. So $1.07, your daily range on SPY is definitely a trending day. So we should be seeing, I mean, that's a tight trending day. You can see here that's the daily range. SPY change, so it's tight. And expect trending moves. Yeah, that's so. Again, we use those probabilities because they work, obviously, and you have very, very accurate math behind these tools. And that's why they work. That's why we hit these targets, because 2 + 2 is 4, no matter who writes the formula. And when you have coders like we have who make the actual indicators, proper and well built, you have leading information as opposed to lagging information. And that's why we can look at these, returns indicators and entropy indicators and know that what we're looking at is not lagging, and it isn't going to tell you what you should have done. It's telling you what you should be doing. Look how, by the way, on the last candle, we dumped exactly to the RMLR and the reverse wave trend on the 5 minute and no, on the 15 minute. Wow. Look at that. I'm going to post that. That is something else. I'm going to expand it a bit so it's really even clearly. I'm going to post this chart. That is something else. It hit that target, which was also at an HTF alpha mean, the 4-hour mean. And boom, from there bounced off of the mean. Now again, why do we care about placing positions at means or near means? Because means are where the action happens, right? Extremes and means. That's how it works with volatility and entropy trading. You want to be looking for positions to get into and out of at the extremes and at the means. Because when you move from an extreme let's say a third RMLR SDF band or a third Laplace band, you move back towards the mean. Well, after you've gone a few standard deviations or a few Laplace distributions, you've usually moved up enough if you have the right position to take a nice profit. And you don't need to be greedy when you're trading volatility because there's always volatility, right? We know that in most, like 80 or 90% of the time, the markets are random. And when they're not random, they're trending, and that's it. And that's, those are the two options you have. So most of the time it's random, which means you can still make very nice trades in randomness, but you have to be careful and you have to know when it is random and when it's switching to a trend, because these things make a difference. That way, if you know you're at a mean when it's fully random, the move away from it is still in randomness until it builds into a trend. And and that's fine, but you have to be aware, because when it switches from random to trending, it can go in either direction, right? And it can go in either direction trending, but you have to be very aware, because the random switch to a trending move can be extremely quick, because it's going from randomness where it could go either way, because of geometric Brownian motion, without any indication of a trend in one direction or another. That's the beauty of trending moves, is they tend to go in the direction, in the same direction until they don't, which is different than random, when it can kind of scattershot all over the place for a while. It might go in one general direction, but it'll still scattershot a lot. And then when you get into a trending move, you'll see, a continual run in that direction until it starts to turn. So right now we are actually opening, and we're right on the border between randomness and a trending move on this 5-minute on SPY. I will just post this link right now on this chart. We can see we have 1 minute left on this candle. After this candle is over, I'll flip over to minis just to look at that, as long as we're still doing this stream. But you can see there we're definitely still in random mode, but the randomness is getting closer towards trending. It keeps flashing back and forth between light blue and pink, and so it's kind of starting to make a trending move. And you can see the A2 correlation is rising again, having sloped down for most of the past hour or so, and is basically starting to rise again. If it manages to continue rising, although it's been pushed back down from the top of that wick there where it just reached, if it manages to keep rising as the volatility continues to expand, we should see a nice move continue to the upside. But if it falls below, and we start to see things like the direction predictors pointing down, and the returns oscillators starting to point down, and the variance falling down, then look for the move back down. But again, right now it's looking good and it's strong, and it's literally at the normal HTF alpha range mean at 409 and 39, something like that. We just closed the candle. It's flipping down. There we go, but it's a very tight flip, so it could easily be just positioning for more continuance to the upside. Let's just double check. There we go. Yep, there you go. It's looking like it could be very random. I'm going to flip now to E-minis. Oops. E-mini. Which contract are you looking at, by the way?
The first one. It's, I think, September. Yeah, it's MES1 exclamation point.
Yeah.
Yeah, they're ripping up now, man. They bounced right off that RWT and the mean and just off to the races, trending now.
Yeah, I see that.
I got targets at 411.17, and then above that 411.27. And really, realistically, if it got to the monthly CVR, it could get as high as 414.
Yeah. 41.12. It already hit, right? Already hit.
Yeah.
41.13.50. That's where it tapped. That's where it tapped before it dumped. This is very nice. Also, it just had a trending candle. It's actually in a trending move right now.
Yeah.
A few candles on the 5-minute. Yeah, that's very nice. And you can see there's a perfect example of when we say the trending move can go both ways. You can see there, literally, on this candle, the trending move ran up and the candle ran up nicely. And as soon as we reached that peak, the entropy oscillators, which are on the bottom right there, they shifted back, pointing down towards the zero, meaning less extreme entropy, and they are pointing, so the entropy is pointing back towards the zero line, which means it's declining, and you can see the A2 on there is also falling off a cliff, pretty much at that zero anyway, while the volatility is rising super high. It's already at 100%. And you can see the price action following. Look at that. Boom. Right there to practically to the RWT. Oh, it hit. And it could easily go down to the next RWT, which is right below. I will post this chart candle as soon as this one is good to go on E-mini.
Man, back to crypto. Solana had a real nice move
Yeah, I didn't.
Just now?
overnight.
Oh, no. Oh, yeah. Okay. Overnight. Yeah, I know. I saw that earlier today. I thought you meant like right now, while we're looking at E-mini futures.
But they were up. They're up 8.5% almost.
Right on. Yeah, and the so we see the E-mini futures here just peg that RWT, or that's RMLR, which is also at RWT. It's at a few of them. Very nicely. We're seeing negative correlation on the rising RMLR, and we're seeing basically very nice volatility playing out right now. This is the time to be trading. If you are trading volatility, this is the time to be trading. Yeah, don't let my voice interrupt you from trading if you're trading. This is definitely a good look at that. It hit that RMLR, it hit that whole area of all those different areas and just bounced right back up. Because if you look at the 1 minute, I'm sure. Let's just have a quick look at the 1 minute before I post it. Oh yeah.
Yeah, it's perfect, man.
I mean, there's a reason I trade the 1 minute, folks. Hang on, I'll put it on the I'll post the 5 minute and then I'll put it on. Then I'll show the 1 minute. But this 5 minute chart is a great example. First of all, of where to get a good entry, because you could have gotten a good entry. Okay, if you opened up at 4:30 when the market opened, if you got an entry anywhere in that candle, right? It was an up candle. You got anywhere in that first 5 minutes. Let's say you didn't get it until the top of that candle. All right. Well, say you went up to the top of that wick and you were slow to get out, but you got out. You got out when it hit the HTF alpha mean range at around 4,112 and a quarter. That's a 0.3% move, which again, with the right position, that's a good move. That is a good move. That's in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're talking like a half hour, 40 minutes, right? Something like that. Not a long time. 1, 2, 3, 4. Yeah, what is it? Yeah. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So yeah, 12 candles. Yeah, that's a pretty sweet move. That is a sweet move. So for 4:30 my time to from 3:30 to 4:30, literally an hour, you got a 0.3% move on E-mini futures. That's, again, you have the right position. That's a nice move. And if you got in from the bottom of the candle because you were trading on the 1 minute like a proper scalper ought to, and you got out near the top, that's a 0.4% move. That is not chump change for an opening hour or even a pre-market open hour. All right, there you go. And look at that. It bounced off of that. It bounced off of that RMLR and the mean and the whole area and just shot right back up. And then this candle has been bouncing up on it too and is now already at the top and above it. And it is trending to the upside. So we see that the prediction directors are in fact incredibly accurate. Like the RMLR prediction director nailed it again.
Yep.
It gave you the exact area to do the switch up. It gave you the exact area to do the entry to go long on that candle on the long candle at the bottom, and it confirmed it on the very next one that I said was if you didn't get in until that candle began. So you would have gotten that entire move already. Again, the 5 minute. of E mini futures after the bounce from the mean and RMLR. So that's a very nice performance right there. Let's look at the 1 minute on this chart because it is. You want to trade trending moves. If you say you like to trade trending moves, what are you not doing? What are you doing if you're not trading the 1 minute? Why are you not trading the 1 minute? This is, you got to be kidding yourself.
Yeah.
Look at the 1 minute. 1 minute TF of E mini futures.
MJ, you there?
Yeah.
You know what? So like that 99 thing you use on that 99 length you use on UPM, perfect too. Really, really a strong one.
Yeah.
So when they came down in 935 and it tagged it, that's exactly what it tagged on mine. That 99 went right through the RWT there for another second, went right to that 99, and then just ripped right back up from there.
Nice.
Beautiful. It's funny. I would have never guessed 99 as a. I never took it off that one.
Oh yeah, well, 99 is super. Again, the thing is the algorithms that we are trading with or against, but with, but the mechanical sharks that are in the water are built by humans, and those humans, no matter how smart they are, will have natural biases, and a very common natural bias is threes, right?
Yeah.
So threes and multiples of threes. And so they do program bots to look at certain things, and they definitely look at threes. They look at threes, sixes, and nines. I'm not a numerologist in any way.
Yeah, I was gonna say I gotta brush up on my numerology, I guess.
I'm not a numerology person at all, but I recognize that there are many people who have a natural tendency, a natural bias to do things that are very common with numbers, and that's to group things in threes and sevens and other prime numbers. It's just a thing people do. It doesn't mean that you should look for patterns based on them, because in trading, we are trading in random markets, so we are not looking for patterns on those. But it is not surprising when these things hit targets that are, in groupings of three, and that's a good reason why we use them in various settings, like lengths of lookbacks and lengths of volatility that we're measuring, or lengths of anything that we might be measuring, because again, human beings build these bots, and humans are, we are organic flesh sacks, and we think very irrationally sometimes. So it's only natural that we see this. Wow, this 1 minute is flying, dude. This is just great.
I was showing to
if
that
you're
point.
Trading the 1 minute E-mini, if you're trading the 1 minute E-mini futures, E-mini futures again. This is a great example of how trending moves can be very nicely traded, even on low time frames, whether you're in a trending day or a ranging day, like I said, because you're going to have these beautiful dips and pops constantly. When you have a nice trending day, you're going to dip below the mean, find the area of the buy orders somewhere stacked on some volatility level, and it's going to bounce from there. And that's what exactly happened about 10 minutes ago or something, and now it's pumping up again, and it just hit the RMLR above, the one RMLR above, where it got spiked right back down, which means that there were a bunch of sell orders there. I'm making this as clear as I can for whoever doesn't trade also, hopefully, that if you're watching us on YouTube or whatever, understand returns follow returns determine the volatility, or are determined by the volatility. Volatility is the standard deviation of returns. So what that means, and variance is the spread of data around the mean. So what that all means, in short, is that when you have a mean of price, which is like an average of price, when you have a mean of price the ask and bid quotes that are on the order books that are spread around that mean, right? The buying and selling orders, if you will, that are spread around that mean determines the volatility, right? Because it determines the movement back and forth of the asset between the buy and the sell prices. That standard deviation of the returns on investment, which is what we mean by when we say returns, and we're speaking of log returns, right? That standard deviation of returns is literally the definition of the volatility. And it's the same thing effectively as the spread of data around that mean, right? The ask and bid sells, the ask and bid orders are the spread of data, right? They are the buy and the sell orders around the mean. And that is the variance, and which is why you can use variance just like you use volatility, because it is another form of looking at volatility. And when you combine that information, which we know has distribution models that work effectively to show how accurate you can predict these things, like one standard deviation away, two standard deviations away, three standard deviations away, you have an incredibly high probability of being right about the move in general, whether it's going to stay within the first standard deviation at 68.2% of the time, it will stay within that first standard deviation. So 34.1% of the time it will stay within the first standard deviation on either side of the mean. And then the second standard deviation is 95.5% around the mean, which means if you're above it, or below it, it's half of that, for the probability it will stay within those two standard deviations. And the third standard deviation is 99.7%, right, of the distribution above and below the mean in total. And if you split that, it's like 48 and a half or something like that. Percent, something like that, 49%, something like that. Anyway, so you have extremely high probabilities and extremely accurate probabilities based on math. And if you look at these assets and you look at the targets they hit, you can see exactly that they're performing as you would expect the math probabilities are telling you, because that's what they're doing. Now, when you have unlikely events, hang on, mini features, yeah. When you have unlikely events, people will say, "Oh, what about black swans? What about things like that? Big, huge, unexpected world events that change things." Well, look, we just had an unexpected event. Well, it was kind of expected, but not. Nobody was expecting the exact date. But the Queen of England died, and if the FTSE 100 kept pumping. Like, you'd think that if England was all in mourning and everybody's doom and gloom about things because they lost their dearly beloved leader or whatever, that markets might be a little bit down. That happens a lot psychologically when people get depressed. They're like, oh, things are whatever, and then people start selling their assets. But it didn't happen. Right. What happened was the markets just kept following the math, and you had a nice pump on the FTSE after the news was out that she was dead. And it's not because they were necessarily celebrating she was gone or that they were sad that she was gone. It's just the maths were going in that direction. So again, that's why we don't care about the news, because it's totally irrelevant. Whatever happens in the news is reported. That word is not well understood. Again, I'll say it. It is reported, meaning carried again, right? Port, carry, again, report. So a reporter is carrying information again to let people know about something that already happened. He's not even the first porter of news. He's the reporter of news. He's telling it at least for the second time since it happened. Because the first time it happened, or when it happens, it happens. Then somebody tells the reporter. Somebody ports the information to the reporter, and then the reporter reports it. So by the time you get news information, it is at least 2, if not 3 layers away from the fact. Therefore, it is useless garbage. I mean, the only thing you can do with news, if you're a scalper, yeah, of course, if you're watching big news, big trends, macro picture, etc., obviously these events are all factored in and whatever, and you got to take certain things into consideration as an investor or whatever. But as a scalper, it is completely irrelevant what happened even an hour ago or what's about to happen in 10 minutes in quote unquote the news, because we see the information of what the actual maths and bots are doing. before any news hits anywhere, and we are able to respond to the actual information before anybody's fear and psychological nonsense kicks in, and they do whatever silly thing they think that they're going to do. Whatever people think they're doing, again, they're trading against 80 to 90% of the market run by bots that have no emotion, that could not care less about what's in the news. Maybe they scan the news and the bots to show their traders, hey, check out this silly thing that's happening in the news. Would you like to exploit this opportunity? The price of rice is falling, or the price of rice is rising. Would you like to buy that? They can scan the news and tell traders what to look for, but they certainly don't run on the news because it's useless. It's past information. And so when we see things like what we see right now, and I will again post this chart because it is unbelievable. We're having a nice, yeah, dude, P-Funk, no emotion equals dollar signs. Absolutely. That's the ticket. People get wrecked because they trade bad information and they get emotional about their trades. They get into a position, maybe they use leverage, maybe they didn't, but they get into a position, they think it's the golden position. It runs one way in their direction. They think they're golden. They're like, I'm going to swing trade this thing, or I'm going to hold on to it for dear life and get rich today. And then it turns around. And instead of getting out when they're still in profit, they're like convincing themselves, no, I got into a good position. It's going to run. And it might run, but the chances are, if they don't know what they're doing, and most traders don't, if they're retail traders, they're going to get wrecked. And if they use leverage, they're definitely going to get wrecked. That's why so many people that run exchanges, they're doing like the marketing or the sales for exchanges. They're constantly chasing new blood because the average retail trader gets wrecked within 90 days. And with leverage, especially in assets like crypto, it's even faster because when you can trade 100x or 125 on CZ's Binance platform, you can get wrecked really quick. At 125, you don't even need 0.5% of movement to get wrecked. At 100x, if the price moves 0.5%, you're wrecked because that extra 0.5% the house takes. So 0.5% movement, not even 1%. But if they took no fee, but if they do take a fee, so 0.5% move on 100x, you're wrecked. Your position's gone, liquidated, right? And what's the point of that? Very nice topping out here, by the way. Still running on a trending move on the E-mini futures, and we are, wow, this thing is a good take profit area. Let's see if it keep running. If not, it's starting to enter randomness a little bit on the 1 minute. We can look at bigger picture, higher time frames, but I like to look at the 1 minute because I think it's actually useful for us as scalpers and people who are watching us on the YouTube. They'll just see screenshots here and there of the 1 minute. Maybe they can follow along, maybe not. Who knows? But we really do this for you guys, to be honest. But here, 916 WBA 38 call. Keep an eye on. Okay.
Yeah, I told you this is my guy who calls me from a desk every now and then. He's been spot on for the last 2 weeks, so I'm just sharing. On Friday,
Shall
I
we go look
posted
at it?
about Nordstrom's.
Shall I pull up WBA?
Yeah, why not?
Yeah, why not? Walgreens Boot Alliance. What? Is that
It's
it?
Walgreens.
Walgreens Boot Alliance?
Yeah, that's Walgreens.
Yeah, okay.
That's for some reason they named it. That's
Yeah. I see that.
Yeah.
So he's saying 38. So that's his.
Yeah, that's the number. So that's the $38 call. They're trading 18 cents. And he usually sends them to me. I try to I watch them a little bit, let it shake out here a little bit. But Friday, he called me on Nordstrom's, JWN. Look at Nordstrom's today. Jeff Water, Nancy. Beautiful. Spot on, man.
Did you post it? I'll post the Walgreens on the 1 minute. People can see.
And here's the other
exactly what kind of. Here, let's just run this one real quick. I'll put this.
Just sharing. That's all. Keep an eye.
WBA Walgreens Boots Alliance on the 1 minute TF today. Okay.
Yeah.
So yeah, that's looking good actually. Yeah, I mean it makes sense, right? Like after a day like Friday and then the weekend, people got very happy with the run-ups on Friday, obviously, and then the bots are trading and they're doing their thing. They don't care if there's some fancy funeral happening or if there's a big event in the news happening or if there's whatever. They're just looking at these levels and seeing, okay, where can I position my next entry and get out quickly? Because again, these bots are running super fast time frames, like the average trade is less than 0.22 seconds. We know that since years. So if they're doing millions of trades per second on these high frequency trading bots, that are doing all these massive moves, they really, really, really just care about, like making a very small amount gain or or loss on any position before they close that position. It can be, I mean, a few pennies, honestly, for the right position if you have a big enough order. As we have a traditional trader in here, there's traditional traders in here who know this from experience. That if you have the right position, you don't need to have a lot of movement on price action to have a very good winning trade and to get out with some nice profits. Walgreens is running above the weekly, by the way. Yeah, it's running above the weekly range. It seems to be. There it is. And it is running just below 30. What is that? 37.20 is the daily R3. Yeah, this one, the 36.95. Yeah, that's the 36.95 that's the daily? No. Yeah, that's the weekly R1. Yeah, the weekly R1 is right next to the daily R2. I mean, those things are really close. So you've got all, I mean, really great targets here. If this thing runs up, great, but right now it's fully random on the 1 minute.
Right.
RMLR is generally looking up, but currently dumping. With the direct predictor also dumping. The longer length RMLR is dumping. The shorter length RMLR is actually about to start pointing up, just as it bounces here off of RWT.
Yeah.
But if it falls through the RWT, I would expect it to possibly go down to 37.03 and then 36.98, and then
that's what
maybe
I'm
hit
looking
down
at
at the
too.
weekly range. Yeah, and it could hit that weekly range at 36.96, which is the weekly R1. It could go there. From
Just keep
there,
an
that
eye
would
on
be
it. That's all.
What's that?
I just like I post these out there. Just keep an eye on it. Sometimes like when a lot of times when you're
Yeah.
having option calls, if
Yeah.
things come out like this, you got to get a lot of time to shake out. This doesn't expire till Friday. You know what I mean?
Right.
So it's
Yeah,
cheap.
yeah.
It's 18
No, but
cents.
I mean, I like to look at these, because
Yeah.
I like to also share them on the. It's nice to share them
Right.
on the charts here because we don't often look, not too often. We don't often look at just random traditionals, but they are quite
But all
fun
the
to look
it's
at.
funny across the board right now. All the charts look alike. I mean, they're all
Sure.
gapped up,
Oh, yeah,
running
because
up.
they're
Here
still
we are at the
correlated.
10 to 10 10
Sure.
time.
Here,
You know,
I'm going to post this. We're seeing total randomness. WBA 1 minute TF with entropy and RO and EO. Hang on. Okay. Yeah, we're running along very nicely here above the mean. But if it starts to descend here a little bit below the mean on this 1 minute, which is currently, I have it at $37 on the aqua line there on that chart on the right. You can see it clearly. That would be, again, a good place to start, to continue shorting, actually, because you should have been short already the last few minutes. If you're trading on the 1 minute, you'd have been good on the short, but it's totally random. So look for an expansion of the entropy in the next maybe 15, 20 minutes or so. Once it does that, I mean, it could be a half hour or so, but once it does that, we could start to see an expansion into a trending move, and the trending move could go up or down. Right now, it's going down. So unless it starts to turn around here when it hits the mean or finds a little bit of some buy orders at that weekly, we're getting close there to that mean, and we're getting awfully close to it now. And then we'll hit that. That weekly. If we start bouncing down there and making another move, we could have a very nice trending day. All in all, like you said, the markets are correlated. So, I mean, and again, why are they correlated? Well, they're correlated because you have traditional investors, traditional, investment houses running these massive bots, trading all these orders. They're not trading a million orders on just one asset. They're trading a million orders per second on like thousands of assets that they have programmed into their bots. And those bots are trading based on the information that they scan. And that information is this information. It's returns based information. Some of them that are very advanced are probably running as well. We know they're running entropy-based information, but probably not like ours exactly, because we figured out how to use it to scalp by correlating it. And we know that a lot of really high-end firms aren't even doing the correlation necessarily, but they're running very successful means, obviously, and they control the markets with these massive bots. But the reason the market's correlated is very simple. When they run a buy order, they run a buy order on 3,000 different assets or 300 cryptos or whatever all at once, and so the prices pump and everything's pegged to, let's say in cryptos, everything's pegged to Bitcoin or ETH. So when you got one big asset moving, all of the little tokens of ETH, all the ERC20 are going to pump also, and then when you got anything tied to Bitcoin will also start pumping. And there's a lot of assets that are very directly tied, so they are definitely correlated. You can see that very clearly. And there's also a bunch of anti-correlated or uncorrelated or reverse correlated, whatever you want to call it. They do the opposite, right? There's plenty of assets that do pretty much the opposite of what one asset or the other is doing. But they're not 100% reliable. Obviously, you can't. It's not like every single candle it was that way. Otherwise, you could just arbitrage them or just trade them and have a 100% success rate without even looking. But they're very close, and if you know what you're doing, you can successfully trade opposite assets very well. By the way, we've just dipped on this WBA.
Yeah.
While we're running late. We just dipped below the RWT, so if we stay below it, then we've got a flashy thing on the entropy. And it's full on random. Okay,
Yeah.
last WBA chart on 1 minute PF, and then after that I will switch. But we are dipping nicely. So if it stays below the RWT now, we could be looking in for a nice trending move down. But again, it could just this is a very pivotal moment now between this area and the weekly R1. So if it bounces here, it could flip to a nice up move. If it falls below here, it could be a very nice trending move down. That's why we like to use strategies like waving in the band between the RWT bands because it's a very effective way to get good entries and exits, and also to use the VRE levels and the normal and the plus levels on the VRE chart because, well, they're just extremely accurate targets for a reason. That's where the price distribution, the price action happens because it's following the returns to those levels. And the reason it's following the returns to those levels is those are returns-based levels. They're not price-based levels, right? They're return-based, Laplace and normal. Let's switch over back to, we are at, we're going to flip to the Bitcoin just to wrap it up. I want to see what's going on in the Bitcoin. Let me just double check. I didn't even look at any other cryptos today. You know what, Michelle? I'll just quickly look at I will go to okay. I'm not going to run through Solana today. Solana, we will touch you next time. Maybe we'll look at you next time. Well, let's just look at the 1 minute on Biddy really quickly before I close this thing out. 1 minute on the index of Bitcoin would be nice, please. Can we do that? Yeah, okay. Good. I'll just chart that one up here. And I'll post this information as soon as it is ready. I know this chart can look scary if you're new to trading Veps, but if you're familiar with this, you can see that this is actually just an amazing way to trade because, I mean, you really get to see all of the target levels get hit constantly back and forth around the mean, and price action loves to zigzag, right? When it's following the returns are zigzagging around the mean. That's what volatility is, and the price action follows it. So the price action is following the returns around the mean, and you can see very clearly there if you're looking at this chart. BTC 1 minute TF. Okay, that's going to be the wrap up on this one. That is, I mean, look at all those trending moves you have on the 1 minute on Bitcoin, on the entropy, and right now we even just came out of one, and we're just back into randomness. We'll zoom into that side a little bit more, so it's just a bit clearer. You can see it, and you can see, yeah, the returns oscillators also just came off of a drop and is now turning up. All in all, I mean, these targets are spot on accurate. it doesn't matter what time frame you're trading. It doesn't matter what asset you're trading. We just looked at a few assets today, SPY and E-mini futures, Bitcoin, and Walgreens. Yay, Walgreens! Walgreens got into an alpha trading video, um, and you can see all these opportunities. These are occurrences of opportunities. The ability to look at an asset, to know when it's at a high to sell or when it's at a low to buy, um, and to do it based on actually mathematically based, mathematically sound and proper math levels, as opposed to just random silly nonsense that we don't touch. And if you want to know why the what we call random silly nonsense is random silly nonsense, just come into our Discord. It's free to come into the free area. And you can see in the why, like, we have a channel that just like shows video after video that other people made, like the BBC and big media houses and independent filmmakers make about showing why traditional technical analysis is a joke, and why the people that are the smart money, the so-called smart money, the big investment houses and the big banks, why they call themselves the smart money and why they call everybody else the dumb money. Because the dumb money is using the gimmicks that those guys market through their minions and their lieges below them, people that are the exchanges and the people that are running YouTube influencer channels and newspaper influencer columns and whatever talking heads on the media, and all these people that are saying utter nonsense about things like all these other indicators we don't look at, and they're shoveling that stuff onto the retail masses who don't have a clue that it's garbage, right? And even if they tell you up front when they do interviews, whenever they do, which is not all that often, but it does happen, when people at the big firms do interviews and they speak about returns, notice they never give you any details about what that really means. And notice they never really tell you about the volatility. They just tell you, I have volatility. And they leave most quote unquote experts to tell you that volatility is based on is price. That's not how volatility is determined. As we just explained, it's the standard deviation of returns of your investment. And that's why proper HFT firms and big banks and everybody else is trading this stuff. They're trading based on returns. They could care less about the price. Like, we could care less about the price. The direction of the price is totally irrelevant to us. We don't care if it goes up or down. We just care that we can get in, grab some crumbs that the bots are leaving behind, and take the profit. Get in, get out, take your profit, right? So again, I know this has been a long one. It's like almost an hour and 20. I don't know if you guys want to keep it going or not, but personally, I'm getting ready to do some other things here anyway. But if you want to learn how to trade Veps, volatility, entropy, probabilities, and statistics, what we call Veps, come into the Discord. If you're part of the Discord already and you don't have the tools that we now give free access to, just open a support ticket and give us your TradingView username so we can just hook you up. Those are premium tools that were not free until recently, but we've decided recently to make those 4 tools free, just so you can learn the big picture and see in action how volatility works. You can literally learn to trade volatility. Of course, if you want full access to the pro trader tools that we've been showing on the screen today, that's available to our members. But you see, even as a free member, if you learn the pro tools that we give away now and give access to these live streams even to you, this stuff works. Come in, ask us questions. Like, let us know what are your thoughts. If you're going to post charts, feel free to post your ugly TA charts in the public area. But don't be surprised if we tell you, after a few times, hey, don't post those in here because we don't trade that stuff. But if you want to post something with an old TA chart to ask us questions about how this is, how your thing is not better than our thing, or how it is better, feel free, and we will demonstrate to you why your chart fails more often than our chart and our tools. So anyway, that's going to do the round. I'm not going to make any calls for today, so to speak, because we don't do that at Alpha Trading. We don't give signals, but we do tell you how to trade. And I will tell you that today you should expect more trending moves than ranging moves. And so far, well, we're seeing that. So far, we are seeing a nice bunch of trending moves happening on the 5-minute and the 1-minute, even the 10-minute, and now up to the 15-minute. We've already had a nice couple. Currently, the 15-minute is still very random on assets like Bitcoin. And I will post one last chart here for the stream to show the volatility of Bitcoin. and the VRE range that it's going through. And you can see for yourself on the bottom right there, the entropy of Bitcoin is still fully random. And therefore, you should expect by the end of the day to see more trending moves on the 15-minute. But definitely, if you're scalping on the lower time frames, I mean, there's trending moves left and right. You can see them on the 1 minute. And you can see that there is opportunity in every single day. If you're trading low time frames, if you know how to scalp Veps, you know, there's a reason we trade low time frames, because these opportunities don't end when the casino is open. I'm sorry, the market is open 24 hours a day on crypto. Anyway, that's going to wrap it up for now. Thank you, everybody, for joining and watching today and participating.
Thank you.
Really appreciate it. And yeah, we will be back here tomorrow, same bat time, same bat channel, around 9 a.m. Eastern time, U.S. Eastern time. Till then, happy trading. Thanks for trading. Thanks for watching Alpha Trading.
Thanks.
We'll catch you later.